Hello traders, welcome to Trading Chart Patterns number 3, the third lesson. In the previous part, in the second part, we spoke about trends and trading trends and trend chart analysis. Today we will continue with a binary price video guide in learning trends with pullbacks. As these are a lot more common, you can get a lot more information getting from this lesson as we progress and move along in learning trends. So what is a pullback? Pullback is a brief price reversal against the main trend. Let's take a look at this print screen from one of my charts that I made, and you can clearly see these gold arrows pointing down against the main trend. If you do not know how to identify and how to notice main trend, I advise you to go to previous parts, to the previous video where I outlined trend identification and how we can spot the main trend. So let's assume that you already know this info, and we will continue speaking about the main trend direction. So when you see these gold, or when you take a look at these gold arrows, they mark pullbacks against the main trend. You see that the swing lows are always, the next swing low is always higher than the previous one, so the uptrend is clearly marked. However, there are quite a few pullbacks, and as you notice, there is a blue line running in the middle, which is half of the Bollinger Band, equals SMA 14, which is simple moving average 14. And this is not random, that these pullbacks pull back exactly to SMA 14, so it can be spotted as a pattern. It's never guaranteed, obviously, that this pattern will continue forever, but sometimes a nice pattern can be spotted, and once you notice 1 or 2 or 3 confirmations, you can start entering trades once 2 or 3 red candles, or it can be green candles in case of main trend going downwards. Anyway, the point is that once you spot 2 or 3 candles going against the main trend and touching the big Bollinger Band middle, which is simple moving average 14, you can enter a very profitable trade starting from these entry points once the Bollinger Band is in the middle of the Bollinger Band is touched. And I would advise you to work with expiry time of 2 candles. So when you are on M1 chart, there will be 2 minutes. If you are on M2 chart, there will be 4 minutes, for example. But for every different, for different traders, every different traders has got different preference for time frame. So I leave that up to you entirely. Okay, so we already mentioned that these trends often repeat, and they may create very good entry points and good patterns. When it comes to technical indicators, I have already mentioned Bollinger Bands. You might add RSI, you might add stochastic indicator, and others that we will discuss in the next series, in next videos as well. And I would like you to notice this sentence, this point. They can be as rear view mirrors on your car. So that means they are very helpful, very useful. You can watch the road in front of you, which would be an analogy for the main chart. And you can also watch another stuff that happened in the past, which you could see in your car rear view mirrors. But imagine that you would have like 8 or 10 different mirrors on your car. Then you would easily get confused from getting too many information, and it would be very distracting. So by the same token, there's the same analogy. Once you start using too many technical indicators, it might start confusing you, and it might start working against you. So I would highly recommend not using more than 4 or 5 indicators and carefully selecting them. You can also analyze your previous results and find out which method works the best for you. I personally use Bollinger Bands, RSI, and Fibonacci retracement levels, as well as main support and resistance, as these are king and queen of the trade, so they are always very good to look at once you start from working from the higher time frame you can draw your main support and resistance lines and then switch on, zoom into the lower time frame to start trading. So that's for my basic general advice and my basic general setup. Yeah, you should be watching the road in front of you, which is the chart. So that would refer to so-called price action. Price action is when you watch the candlestick speed, when you watch the chart speed and emerging patterns. Now it's time to look at trend with larger pullbacks, and these are slightly more complicated, as can be seen from the next picture, and I would refer to it as a bumpy road. You can still drive ahead, you can still get to your destination, you might still succeed trading, but it's a lot more attention is required. Let's say in this rising trend you could trade these couple of pullbacks, or let's say you would wait until a confirmation is made or a couple of confirmations are made. So from this point you would enter here and maybe here, so that will be 2-1 ratio, and then it breaks the pattern, trend breaks the pattern, and it kind of breaks it here again, and then it breaks the pattern again. So it's a lot more complicated, it's more difficult to trade these trends, and it requires a high amount of experience. So once trend escapes, evades your pattern zone, I suggest that you are very alert and stop trading, and in no case you should double your investment or try to chase any possible losses. So this is very important. These trends can be traded, but it requires a large amount of experience, and it's good to switch back to a higher time frame where these, let's say, very short breakouts, which may be seen as a noise on low candles, will be pretty clear on higher time frames, but we will get to that in one of our future videos. So this is Binary Price with video number 3, and we will see you and speak to you very, very shortly with next part and next episode. So take care, have a good day, have a good evening, and speak to you very soon. Bye bye.